The $2,000 secret: how to maximize your 2026 tax refund. G'day legends, welcome to Imperial Finance Management. Look, the 2026, and you know what that means. The end of financial year, EOFY, is looming like a massive storm over the horizon. Most Aussies treat tax season like a trip to the dentist. Scary, painful, and something to get over with as quickly as possible. But what if I told you that by rushing your return, you are effectively handing over a 2,000 Australian dollars donation to the government every single year? That's money that could pay for a week in Bali, a massive chunk of your rego, or just help with those skyrocketing grocery bills at Coles. The tax gap isn't just a myth. It's the difference between what you get back and what you actually get back because you didn't know the rules. In 2026, the ATO has upgraded its AI systems to track your every move, but they also have legal pathways that allow you to keep more of your hard-earned Australian dollars. Today, we aren't just filing a form, we are launching a rescue mission for your wallet. We're going to deep dive into the secrets that high-income earners use to slash their tax bills legally. This isn't about being a dodgy character, it's about being a smart Aussie. Question 1. Before we dive into the first secret, I want to hear from you. What was your biggest tax refund ever in Australian dollars? And what did you spend it on? Was it a new BBQ, or did it go straight into the mortgage? Alright, let's talk about the biggest trap of 2026, working from home, WFH claims. Most of you are probably still using the fixed rate method, which is currently around 67 cents per hour. It's easy, sure. You just count your hours and boom, you're done. But if you're a professional in Sydney or Melbourne, where electricity prices have gone through the roof, the fixed rate is likely robbing you blind. In 2026, the actual cost method is where the real 2,000 Australian dollars secret lies. To do this, you need to calculate the actual portion of your expenses. We're talking about the depreciation of that expensive ergonomic chair you bought, your high-speed NBN connection, and even the heating and cooling of your dedicated office space. Let's run the numbers. If you work 40 hours a week for 48 weeks, the fixed rate gives you about 1,286 Australian dollars. But if you calculate the depreciation on a 3,000 Australian dollar laptop, a 1,000 Australian dollar desk, and 40% of your 200 Australian dollar monthly internet bill, your claim could easily jump to 2,500 Australian dollars or more. That difference alone is over $1,000 back in your pocket. The key here is occupancy versus running costs. If you have a dedicated studio or office, you are sitting on a gold mine. But remember, the ATO is checking if you're also claiming that Netflix subscription. Don't do it, mate. Keep it professional, keep it documented, and keep your receipts in a digital folder. The Vehicle and Travel Logbook. Hack. Now, let's gear up and talk about your wheels. Whether you're a tradie in a Hilux or a consultant in a Tesla, vehicle claims are a massive area of confusion. Let's clear the air. Driving from your home to your regular place of work is never deductible. The ATO sees that as a private expense. However, if you are traveling between two different jobs or carrying bulky tools that can't be left at work, you've just unlocked a massive deduction. In 2026, you have two choices: the cents per kilometre method or the logbook method. For the lazy ones, the cents per kilometre lets you claim up to 5,000 kilometres at a set rate, around 85 cents. But if you're doing serious mileage for work, the logbook method is your best friend. You need to keep a log for 12 continuous weeks, and it's valid for 5 years. Imagine this. You calculate that 60% of your car's usage is for work. You can then claim 60% of everything: fuel, insurance, rego, services, and even the interest on your car loan. On a modern car, that can easily add up to 3,000 to 5,000 Australian dollars in deductions. If you aren't keeping a logbook in 2026, you're basically leaving a pile of cash on the side of the Monash freeway. Question 2. This is a big one for our next video planning. What finance topic should Imperial Finance Management cover next? Your suggestion might be our next 30-minute go. If you have to wear a compulsory uniform with a company logo, you are eligible for the laundry claim. Most people don't bother because it seems small. But think about it. The ATO allows you to claim $1 per load if it's just work clothes or 50 cents if it's mixed. Over a year, that's a couple of $100 for just doing your laundry. It's not just clothes. If you work outside, like a landscaper or a construction worker, you can claim sun protection. We are talking about sunglasses, hats, and sunscreen. In the Aussie sun, these aren't luxuries. They are necessities. Then there are tools. In 2026, if you buy a tool for work that costs less than $300 you can claim immediate deduction. If it's more, you depreciate it. I've seen tradies claim everything from a digital spirit level to heavy-duty protective boots. Every single Australian dollar spent on making you safer or more efficient at your job is a potential deduction. Don't let these small items slide. They accumulate into that 2,000 Australian dollars secret we're talking about. The rule is simple. If you need it to earn your income and it's not provided by the boss, it's a deduction. Professional fees, education and unions. Knowledge is power, but in Australia, knowledge is also a tax break. This is a section many white-collar workers miss out on. Are you part of a union? Those fees are 100% deductible. So, are you a registered nurse or a teacher with annual registration fees? Claim them. But the real big fish here is self-education. If you've taken a course in 2026 that directly relates to your current job and helps you maintain or increase your income, you can claim the tuition fees, textbooks, and even the travel to the training centre. It's for a new career, not your current one. But if you're a junior accountant taking a CPA course, that is pure tax gold. We're talking thousands of Australian dollars in potential claims. Question 3, are you currently using a tax agent, or do you file yourself through MyTax? Tell us why in the comments. Welcome to the modern era. It's 2026, and almost every Aussie has a side hustle. Whether you're driving for Uber, doing tasks on Airtasker, or flipping NFTs and crypto, the ATO's AI data matching system is now linked directly to bank accounts and exchanges. You cannot hide this income, so you might as well manage the tax on it smartly. When it comes to crypto, remember, every time you swap one coin for another, it's a capital gains tax, CGT event. But here is a tip. If you hold your crypto for more than 12 months, you get a 50% CGT discount. That's a massive saving of Australian dollars. On the side hustle front, treat it like a business. If you're an Uber driver, you can claim a portion of your phone, your car cleaning, and even the mints you provide for passengers. If you're an artist selling on Etsy, claim your supplies and your home studio space. The goal is to offset your side income with side expenses so your taxable income stays low. Many people get hit with a tax debt at the end of the year because of their side hustles. Don't let that be you. Set aside 30% of your side earnings in a high-interest savings account so you're ready when the tax man comes knocking. Audit Proofing and the Imperial Blueprint. We've reached the final stage of our 2026 Tax Mega Guide. You've found the deductions, you've calculated the WFH costs, and you've logged your kilometres. Now, how do you keep it? The ATO audits thousands of Aussies every year. They don't just look for big criminals, they look for simple mistakes. The best audit insurance is the ATO app's My Deductions tool. Take a photo of every receipt the moment you get it. In Australia, thermal paper receipts fade faster than a politician's promise, so digital copies are a must. Let's recap the Imperial Blueprint. 1. Use the actual cost method for WFH. 2. Log your work travel for 12 weeks. 3. Claim every laundry load and sun protection item. 4. Don't forget union and professional fees. 5. Account for your side hustle expenses properly. Question 4. Before we go, I want to know, which of these 7 chapters was the biggest aha moment for you? Was it the WFH actual cost or the vehicle logbook?